Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. You know, the AI party is still raging, but for some of these semiconductor giants, it feels like the lights just flickered on and everyone's sort of looking around realizing who showed up maybe a little too early. Today, we're doing a deep dive into Applied Materials, ticker AMAT. Our research was captured this morning, November 14, 2025, at 5:57 a.m. Eastern. So the company just posted a record year. It's all fueled by AI demand. Here's the mission then. What is the core conflict between AMAT's undeniable strength and its suddenly fragile-looking stock price?
Well, it's fascinating because AMAT's results are hitting a market that is already, let's say, on edge. The whole macro environment is very risk-off right now. We're seeing jitters everywhere.
The NASEQ is leading the decline pre-market.
Exactly. And investors are just tightening up ahead of some really crucial data. You've got the PPI, retail sales.
And a bunch of Fed speakers today, right?
Yeah, multiple Fed speakers. So uncertainty is, it's thick in the air.
But wait, if you just look at the company's performance, that uncertainty just vanishes. I mean, AMAT capped a record fiscal year. Over $28 billion in revenue, stellar earnings. Management actually used the phrase insatiable demand. That should suggest a really firm floor for the stock, shouldn't it?
You'd think so. But the problem is, those fundamentals might already be priced in and then some. And that's where the first major conflict arises. Valuation versus the price tag. The stock was last trading near what, $230?
Just about, yeah, near $230.
Right, but our analysis shows the fair value is, well, it's significantly lower. Based on a DCF, a discounted cash flow analysis, you're looking at something closer to $187.
And even lower if you go by earnings multiples.
Much lower, down at $168. That kind of premium, that gap, it requires total perpetual perfection. And, you know, perfection is hard to guarantee when you're facing these global headwinds. We're already seeing the first cracks in analyst consensus. There's a new sell rating that just popped up.
Oh, that's interesting. Even with most deals in positive.
Yeah, even though 62% are still positive. And crucially, AMAT management itself flagged a big geopolitical concern. They're anticipating a potential decline in equipment spending from China, all because of these ongoing U.S. export controls.
So strong numbers meet international frictions. That makes sense.
Yeah.
We have the valuation stress and this geopolitical risk. But what's weird is that the average investor seems surprisingly calm, at least if you look at the options market. Let's talk about that disconnect between the sentiment and the technicals. The sentiment is actually slightly bullish. The put-to-call ratio is at 0.86.
Which means more bullish bets than bearish, basically.
Exactly, and short interest is minimal, just over 2%. So nobody is aggressively shorting this AI story. But, and this is where the rubber meets the road, the technical chart tells a completely different story.
A very different story.
The picture is rapidly deteriorating. We saw the price drop sharply from $227 down to $213 after hours.
And it settled around $212 pre-market. That's a big move.
It's a huge move. The short-term trend has definitively reversed. It broke right below key moving averages.
Yeah. And the money flow, that's another key indicator.
Yeah, the money flow has turned sharply negative, so capital is clearly exiting the stock. Momentum gauges are fading fast. The sellers are in control right now.
So, okay, let's synthesize all this. The AI fundamental story that provides a floor. It prevents an outright sell call. But you've got this toxic combination of a stretched valuation, a risk-off macro environment, and these really negative technical signals. It all forces our verdict to be a neutral stance with a bearish bias.
A bearish bias. Okay, so what are the key levels people should be watching? Where's the battleground?
The battleground. Okay, so upside resistance is pretty clear at $230. Key support to watch is right at $220. And then below that, you've got that after hours low right around $211.50.
So when would this bearish bias be invalidated?
You'd really need to see AMAT close back above $233. That would suggest this whole breakdown was just a brief shakeout, not a real trend shift.
Got it. So what does this all mean for you, the listener? It seems like AMAT threw a great earnings party, proving the AI boom is absolutely real, but the stock price might have arrived early and now has a bit of a valuation hangover. The real question is whether that amazing future growth they're promising can cure the current market headache. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.